Welcome back to my channel, Balance Sheets Matter. In this video, I'm going to be looking at Alibaba and do a little bit of stock analysis. But before we get into that, make sure to subscribe to my channel, Balance Sheets Matter. I do individual stock analysis videos. And as you can see, I have done a video on Alibaba before, basically saying this, what I call illegal accounting scam exposed. And actually, the first video on the channel, I did call them the Chinese Enron. So I'm going to examine some of the stuff I basically said in the past and kind of show how that's slowly coming true and just give you a few things to ponder on if you really believe what Alibaba is saying based on their somewhat sketchy accounting practices. So when we get into the valuation, for example, of Alibaba, people look and say, oh, 26.66 PE, that's not too bad. Well, I'm going to explain why that's not really basically the case. So when we get into the financials here, one thing I do want to kind of point out is, in their underlying business here, the return on invested capital versus the weighted average cost of capital. So when they invest money into their own business, this is the return they're getting, and this is actually the cost of their capital based on debt or having to, raise money by issuing shares. And you can see, for example, that the return on invested capital is quite low and in line or potentially even sometimes, lower, for example, the last 12 months than the weighted average cost of capital. So this is showing that when the Alibaba is investing in its actual company itself, it's not able to get very good returns from that. So, we look at the revenue trend here, and it does look like it has been growing really well. But the one thing you will see is from basically when they IPO'd was around 2014 here, and it has continued. Well, their gross margins have been going down and down and down and down. And this does show that the company basically, as they are, expanding, they are not expanding into as profitable areas at all. And another thing is we look at their operating income. You can see right now it is probably a little bit maybe lower because they are doing a little bit of investing into their alleged own AI stuff. But if you look at the past history here, going back to 2018, they were showing $11 billion of operating income in 2018. And right now, if you actually look at how much the income is, it's like, over tripled basically, 39 billion to 42 billion dollars. They effectively still have the same operating income now. So that is shrinking. And this is one of the things that I did say is Alibaba in their basically expansion and what they actually show on their balance sheet and their consolidated financial statements is going to basically get worse and worse because there are not very many more attractive areas for them to expand in. And well, what do I mean by that of showing it on their balance sheet? Well, a big trick that people don't understand about Alibaba's accounting is this interest income and interest expense. This is not actually income, or this is not actually an interest expense. This is basically them marking up and marking down investments they've made, which is effectively just into other Chinese companies, subsidiaries, and Chinese stocks. So these are non-realized cash, basically things that happen on the balance sheet. So for example, in this last year, when we're seeing, they had $5.1 billion of interest income, well, they just marked up their investments that they've invested into, which are just Chinese stocks, $5.1 billion. And, that gives them the net income of that $12.6 billion. But if we were to actually just factor out the net interest income here, and basically just look like what they would be without that, because this actually wasn't a real gain. And if the Chinese stocks do go down, it definitely won't be a real gain. They would actually be at a 44 PE right now. So if we do look at the underlying business of Alibaba at a 44 PE, I do not think it is actually trading very cheap at all. The next thing to basically look at is you can look at the share buybacks they've been doing because they have been buying back more shares. But if you compare that to when their IPO it was actually 2,465,000,000. So they have bought a few percent of shares. They did issue a whole bunch, and they basically have bought them back. There's been very minimal return to basically the shareholders in this matter. That's only about 2.1% of the shares they have reduced. And the other thing, they have started paying a little bit of a dividend, which is basically $6.5 billion. But when they originally IPO'd back in 2014, they originally raised $25 billion. So they have not basically provided very much return to shareholders overall. And so, where is all this money going? Well, I'm going to basically show you where it's going now, and it's going into these other investments on their balance sheet. So if we look at their marketable securities here, which includes some of these investments, well, we just have under $30 billion there, and the investments and advances here, well, this is primarily the companies they own between 20 and 50%. And this is companies then that go under the equity method of accounting. And you should look at my past videos if you really want to explain this. But the thing is, if they own over 51% of a company, then that company's financials gets consolidated in the financial statements and we see all the details. But if they own just 1% under 50%, then it just goes at an investment here and it can be marked up and down based on the current value. And this can be highly manipulated. As I showed, for example, in my last video, years ago, they had Alibaba Pictures, which used to be consolidated in their financial statements. Then Alibaba, it does another round of fundraising, and that dilutes them, Alibaba's ownership, to 49% conveniently, and also conveniently Alibaba Pictures was actually unprofitable, and they don't have to consolidate Alibaba Pictures in their financial statements anymore. And because it actually has now a higher valuation from the investment that Alibaba Pictures raised, not only is it not showing the loss from the money it's losing, they actually get the market up on their balance sheet as a profit, or actually on the income statement as a profit, and show it as a higher value on the balance sheet. So this is a very large trick Alibaba has been doing. So I'll show you here now in these years, for example, 2022 to 2024, you can see their net interest income. They were actually having to mark down some securities. So, well, what was happening there during that time? Well, the Chinese market was going down. So really, their investments, you don't have total transparency. You don't know if they're actually being profitable. And they're kind of just go with the ebbs and flows of the overall Chinese stock market. So Alibaba, well, they do have a little bit of a core business. You're effectively kind of getting wrapped into this almost leveraged play on the Chinese market and stocks that you actually don't know if they're profitable. And probably from the amount, as I'll show you, they do invest in these. I don't think they are very profitable because not only does Alibaba do this, but basically all the other big tech companies do this. You'll find the same practice on all their financial statements. So I think what they do is these less profitable companies, they're all going, investing in them, having into equity company method of accounting, and they're effectively funneling all their cash flows they're making off the balance sheets, off their balance sheets into these other entities. And you don't know what they're doing with those. They could be paying themselves very rich salaries. And you can see even from Alibaba, they've been doing a lot of share stock-based compensation. So when they do buy back shares, most of these shares they're buying back are just going back to the management, allowing them to cash out. And then we do look now at how much they're actually investing in these other businesses. And this is purchase of plant, property, equipment. This is what they're investing in their main business. And you can see basically from 2017, 3.3 billion, 7.2 billion, 5.2, 4.6, 6.3, 8.4, 4.9, 4.4, and 11.8. Now let's compare this to the purchases of investments. Well, over that same period there, well, there's only 680. Then it starts really actually after 2018 starts ramping up. Then around 2 billion, 11 billion, 7.8 billion, 26 billion, 23 billion, 17 billion, 11 billion, and 18.8 billion. I did break this down just a little bit since their IPO, and overall what they basically shown in their overall, total income claims, which does include the markup of investments, is around $150 billion. At the same time, the amount they have, invested in all these entities, if we also add the markup in, because that income basically includes it, is equivalent to probably closer to $120 billion. So effectively over 3/4 of all their income, they are putting into these off-balance sheet investments that uses equity method of accounting. And this is purposely distorted, and you can't see actually what is happening with all those companies anymore. So basically, as I was saying before, there is a little bit of, they did start recently paying a dividend. So there is that little bit of a dividend going out, but that's only a fraction that's basically being paid to Alibaba. So anyways, that's basically the summary of what it is. You can look at the past videos if you want a bigger explanation. I will just now give you my opinion on where the stock price is going. Because I did these videos around in this thing here, and people comment, oh, well, the stock went up. Well, the thing is, I was never making actually price predictions before with this. I'm just showing you how they are doing this very sketchy method of accounting, and you are actually not seeing any of the profits. All the profits are basically going into other investments off the balance sheet. And you don't know, those other investments that goes in there, the management, they could just be paying themselves all out and just funneling the money off. But the amount that's actually left within Alibaba is very little. There's very little being returned to shareholders. And I think we can see from the slowly kind of like deteriorating margins, this will catch up to them at some point in time. It's probably going to be overall with the Chinese economy. But you can kind of see, even when they did really start ramping up this, investing into other Chinese stocks, this is effectively when the stock peaked. So if we look back at 2020 here, and this is right around basically where the stock peaked on the income statement we're now looking at, you can basically see that if we go into the net interest income here, this is really about the time they actually started, ramping up this activity, and then afterwards basically showed some losses. So I think this practice of accounting is basically slowly catching up to them. For example, I didn't short them down here, but when they were about here at about 160, 155, I did actually buy some put options, so which are actually very healthily up right now. A few days ago, before this recent rally, they were already up 50%, which was quite nice. But I do have these, and I think they're dated for 2028, so I am still planning on holding them. And I am kind of expecting Alibaba to potentially get down to at least the lows here, potentially down to there at minimum before I'm looking at taking profits on my put options. Because again, when you're investing in Alibaba, you're not investing so much in Alibaba, you're actually investing in kind of a proxy of the Chinese market, which you don't actually really know what's going on with all their investments there. So anyways, basically that's the update on Alibaba. What all the counting I've gone over is not inherently predictive of price. This is overall what I'm basing on is a little bit more over market sentiment and the valuation in Alibaba to some degree. But anyways, watch the previous videos, get a better understanding. Alibaba, I do not trust the stock. If you're investing in a stock, you want to know where the money is going. When over 3/4 of the money is going into other investments that you have no clue basically what's happening with, that is a problem in my opinion. So anyways, I hope you liked the video. I hope that gave you some food for thought. Make sure to subscribe to the channel and like the video.